For now, though, let's take a look at the JSE All Share Index, which was up 0.4% to around in early trade as investors gauge the global monetary policy outlook while also digesting better than expected Chinese GDP data. Petri Redelinghuys is a trader and the founder of Herenya Capital. He joins us now to take a look at how the markets are faring. A happy Monday to you, Petri. Does this translate to the markets?
Good afternoon, and it does a little bit. I mean, our market is slightly higher. We had a fairly strong week last week, but Thursday, Friday ended really poorly, with US markets sort of cooling off, our market also coming under a bit of pressure. But so far, so good for the beginning of this week. The US is closed today, thanks to Martin Luther King Day, so it's a public holiday for them. The rest of the world is at work, however. Top 40 index up just shy of 0.5% at this stage, so it does seem as though we are starting the week on a good foot. I think thanks to some stimulus by the Chinese authorities, they're cutting sort of interest rates and the rate at which banks loan money from the central bank, and that's sort of feeding through to relatively positive markets so far.
China opting to slash the borrowing cost to its medium-term loans for the first time since April 2020, while its economy also grew by 1.6% on quarter in the 3 months to December 2021. What does this decision and data tell us about the state of affairs in that economy?
So there's a couple of things really that we can glean from that, right? The first thing is that the economic situation in China is starting to stabilize. Their economy is starting to stabilize. So we see GDP numbers starting to grow. I think the growth rate is something like 8.1% for the year. Yes, on a month-on-month basis, it is slightly slower than what was anticipated, but it does seem as though the Chinese economy is on track for a solid recovery. And simultaneously, what we have is a bit of a divergence of monetary policy. So China is easing sort of monetary policy while the US is looking to tighten monetary policy. So from that perspective, it does seem that China is on a good foot, right? Once China is fully recovered and growing at its regular pace once more, that's going to be good for stuff like commodities demand, manufacturing, that type of stuff. So manufacturing output, all that kind of, all those sectors are starting to recover in China and is looking really good in future. Plus, you add to that a little bit of, let's call it stimulus or easing of monetary policy, lowering interest rates, interbank rates, medium-term sort of borrowing rates. That's all really stands in China's stead or in good stead for economic growth into the rest of the year. There is one downside risk, though, which is the Omicron variant, right? I've said before, Omicron is probably a good thing, probably leads to the end of COVID. It is more transmissible. It is less, deadly. However, the Chinese vaccine we've seen is not as effective against, preventing illness or serious illness as what some of the Western vaccines are. And China has a very strict zero COVID policy. They've had something like 136 cases over the weekend. So the downside risk here is that, with their very strict zero tolerance on COVID or zero COVID policy, with a few infections and, let's say, a diminished ability to fight the Omicron variant as what some of the Western countries have because they have a superior vaccine, that could potentially lead to a very hard lockdown in China, which, of course, would set us back quite a bit. However, it's too early to tell whether or not Omicron is going to be a big, serious problem and cause national lockdowns in China, or potentially if they're just going to do regional lockdowns like they have been doing recently. But overall, it seems as though the economy is stabilizing, although at a lower base than it was pre-pandemic. If you look at stuff like the housing market and that, it is sort of starting to stabilize, not quite as industrious as it was before the pandemic, but, the road to recovery is being paved.
Let's come back home. Stats SA is due to release the first set of data this week, post the July riots, festive season, spending, rate hikes, and petrol price increases. What picture does this data paint about South Africa's current economic state?
So there's quite a bit of data, as you mentioned, expected out later this week. It'll be interesting to watch because obviously the first up tomorrow is mining production. There's a few concerns around this, right? So we've had the highest number of days disrupted by load shedding thus far in 2021. So these numbers are obviously looking back. So it'll be interesting to see how economic output was impacted by the higher level of load shedding. In the last sort of portion of the year, electricity grid is a bit more stable, so mining production might not be that badly affected, but there are obviously other sectors as well. Retail sales is coming out, inflation rate is coming out, building permits is something else, PPI, and then on Thursday we have an interest rate decision as well from the Monetary Policy Committee. So it's going to be an interesting week. I don't want to make too many forecasts on what I think is going to happen. It's just going to, I guess it would be nice to take stock as to where we are. It feels like the world is coming back to normal a little bit. So it'd be nice to see that coming through in the data, and then obviously dependent on that data, it'd be interesting to see what we do with interest rates and also the inflation rate. The previous number was at 5.5, still within the target range of between 3 and 6%. So it's not bad. There's no real reason to move. If that creeps higher, though, we might see interest rates going up. So I guess we'll wait and see. A lot of what we do, obviously, we do take our lead from the US as well. For me, I'm just going to be sort of mostly focused on the mining production numbers from tomorrow. I think that there is going to be quite an uptick, particularly in stuff like industrial metals of coal and energy-related commodities. So that's, I think, definitely something to watch. However, I think we've seen some warning shots as well that Eskom has quite a bit of maintenance to do. They have to take 2 generators of 960 megawatts offline for maintenance this year, 2 of them in separate times, so that might mean more load shedding for the rest of the year. How that plays out, I guess time will tell. So for now, I think we just kind of sit tight, watch the retail sales numbers, watch the mining production numbers.
Long may that sense of normalcy last, at least. Finally, Herenya Capital has published its preliminary trading statement for the year ending 31 December 2021. Let's look at the numbers.
Yeah, so that's a very good trading statement, actually. I mean, if you look at, there's not too much information in it. It's obviously just preliminary, but the dividend per share is up something like 80%. So they are looking to increase that to something like to 45 cents per share, which is, or in excess of 45 cents per share, which is great. Headline earnings per share up 95%, sort of normal earnings per share also up 95%, net asset value up 19%. So it's a very good trading statement. It'll be interesting to see what makes up, where does this growth come from? Obviously, there were a couple of interesting things that they've done over the last quarter. For example, or over the last year, they've made an investment into Revix, which is a very modern cryptocurrency-focused arbitrage kind of business. So I'd be interested to see how much that's added to their income and to their earnings. Other than that, they've got some really good stuff on their balance sheet, right? They've got a large investment in the likes of Transaction Capital that we've seen has done really, really well. We've also seen Metrofile Holdings do really well over the last little period. So I guess we'll see. For now, the trading statement is looking really good, but we've got to wait a little while before we get a full report to see exactly what the actual gears were that were turning that led to this increase.
Okay, so a lot of positivity coming through from you for the financial year ahead, at least. Thank you very much for that update.